Can you imagine having everything in the palm of your hand? The $100 million multifamily portfolio, the house with the loving family, coaching the neighborhood baseball team, just to have it all snatched away from you. How would you respond? How could you bounce back? This is what happened to our next guest, Mike Morawski, and he's here to share his experience of loss and redemption with you. Enjoy the show. One of the ways that we are able to bring value is by bringing special guests like the one that we have here today, Mike Morawski. Michael, thank you for coming on the show.
Appreciate you guys putting this together.
All right, Mike, if you don't mind, would you please tell us a little bit about yourself?
Sure. I've been in real estate for 30 years. I started out on the residential side as a residential agent. Prior to that, I had a general contracting business. And I always tell people, I say, hey, look, as an entrepreneur, you do everything in business. So you do the sales, the marketing, the ordering, the hiring, the firing, the bookkeeping, but I was still in the field banging nails and had grown this company and felt that I really needed to do something different. Woke up one morning, looked at my wife at the time and just said, I'm burnt out. I can't go on anymore. I was fortunate. I had somebody knocking at my door at the time to buy the company. So I sold the company. Went and did my first real estate investment. I bought a 2-flat and I house hacked it. And this is long before house hacking was sexy. You know, now people do it all the time. It's kind of the way of the world. But I had heard Jim Rohn say years ago that success leaves clues. So find somebody successful, model what they do. You'll cut your learning curve and speed up your success. So I met this real estate agent who was successful at the time. Went to him, said, hey, you know, I'd like to go into the business. He encouraged me to go into the business. And I asked him if I could shadow him and his team. And he said no. And I was kind of surprised at the time. But he said, I'm going to do better. I'm going to make you a cassette tape. So now I'm dating myself a little bit, but he made me this cassette tape and I listened to it over and over and over again, similar to these podcasts today. How many golden nuggets can you pick up off a podcast and learn from? So I listened to this. I went in the real estate business. My first 9 months in the business, I sold 78 houses. I was RE/MAX Rookie of the Year. I went on to build a team selling 125 homes a year. And I did that for about 12 years consecutively. 2005 rolled around and I saw the market starting to shift and I wasn't really sure why or what was going to happen, but I knew I needed to do something different if I was going to keep the, lifestyle up, keep all the people working for me that were working for me at the time. So I decided to go in the apartment business. And I always tell people, I say, look, I didn't just wake up and decide to go in the apartment business. It had been something that I dreamed about for years. I watched a couple large apartment syndicators in the Chicago market that, I learned the basics, right? We raise capital from private individuals. We marry it with a great real estate deal. We stay in the middle. And as long as everything goes well, everybody makes money. I syndicated my first apartment deal in 2005. Was a small 11-unit deal. Over the next 30 months, I raised $18 million. I bought 4,000 apartments in 5 U.S. markets and scaled a property management company managing 7,500 units. All in all, I built a company valued at about $100 million.
You heard the beginnings, you heard the stepping stones leading up to the point that he built a portfolio valued at $100 million. We want you to know that you can partner with us. When you're out there looking for deals and you have questions about underwriting or funding, reach out to us. You can contact us on our website, bb4ai.com, and fill out the contact information form. That way we can set up a call. We're currently underwriting a few deals. However, if you have a deal that you want to bring to us or just a general question, we want to help you be successful with multifamily investing. And we want you to avoid certain situations like what Mike is about to explain to you right now.
2008, 2010 happened. The world came to the worst economic crisis in history, and we hit a brick wall at 200 miles an hour. We had grown way too fast. And I always tell people, I say the first mistake I made was I grew too fast as a company, and you don't need to scale that big, that fast. Slow down. It's a marathon, not a sprint. 2008 rolled around, unstable, started to unravel, had a dozen deals I should have just let go to foreclosure, and a few investors get hurt. But I'm a hero. I'm the oldest born in my family, and I want to make sure everybody's happy. So I thought I could save the whole company. So I started to move money back and forth from profitable to non-profitable companies. And my attorney, my accountant both said it's okay to do that. Just put it back when the markets change. And I was under the impression that, hey, this is a short recession, 17 or 18 months. We'll have a 10 or 12% correction in the market, and the markets will bounce back. Well, we all know that didn't happen. It was 7 or 8 years, 40% correction in the market. It's a hard storm to weather. But for non-disclosure, I wound up being charged on wire fraud and mail fraud charges, and I got sentenced to 10 years in federal prison for that.
Hey everyone. So a few things that Mike just discussed, I want to, pay close attention to it, right? So he said growing too big too fast. One way to alleviate this problem is by having systems in place as you continue to grow. Another thing that he talked about is something that we don't want you to do. Understand, what he did was he moved money from one performing asset to another non-performing asset. Remember, as we raise private capital from private individuals, we have a fiduciary responsibility to do what's right, do right by them and the money that we raise from them. Mike also talked about non-disclosure, and that's what got him convicted of wire fraud. Okay, he didn't disclose this to his investors, what he was doing with these funds. So as you're out here, please be very cautious and always disclose things that you're doing to your private investors. We will now hear Mike talk about some of the defining moments.
So we basically got wiped out, and I went off to serve a 10-year prison sentence. So I went to prison in 2013, and I always tell people, I say, look, I never flew private. I didn't have a big house. I didn't buy a fancy car. I didn't have a boat. I was the neighborhood baseball coach, soccer coach. I was home for dinner most nights. And, I got ripped from that to live in a 12 by 12 room with 3 men I didn't know, nor did I like, wondering what the hell happened to my life. And I was in prison, and about 6 weeks in, I walk into the gym one day, just window shopping, not looking to work out, not looking to do anything. And I had gone from running marathons to being 35 pounds overweight. I hated myself, didn't know what tomorrow was going to bring, if tomorrow was going to show up. And this guy walks up to me in the gym that day and he says, hey, don't let these people beat you. All they want to do is take from you everything you've ever known. They can take your business, your cars, your family, your money. They can destroy your family, but what they can't take from you is who you are and what you're made of. They can't take what's inside of you and what's caused you to build that $100 million company or any other company you built. And I don't know, it's like I had this defining moment. I believe we all get these defining moments, but the light switch flipped, and I listened. He said, come to my class every day, start working out, start losing weight. You'll start to feel better. So I started going to his class. I started to work out. I started feeling better. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books while I was gone. One is Exit Plan, your complete guide to multifamily investing and why you need an exit plan before you buy. I wrote another one on property management that hopefully will get published this year. I wrote an ethics course While I was in prison, I taught real estate investing, property management, and ethics for 6 years. I was on an outreach program. I'd go into the community, tell my story to small business owners and college students. And I met a professor from the University of Minnesota. He and I co-authored a paper that got published in the Business Journal of Ethics. It gets taught today at the collegiate level for forensic accounting and sales and marketing classes. And, today I'm back home. I'm in the coaching and training business. I teach people not to make the mistakes I made and how to scale a business systematically. I am the chief investment officer for a couple of multifamily hedge funds, and we buy and own and operate multifamily assets in the Southeast United States. And by the way, I got approved by the SEC to go back and be an issuer of securities and sponsor deals and raise capital again. So, life's kind of come full circle. And today is a different place than it was a decade ago. But that is, that kind of walks you through everything that's happened. So
that, as you can see, the ups and downs that Mike Morawski really came across, really has shown and proved as far as, where he came from, the trials and tribulations that he had to go through, and, even now where he's currently at. So I just want you to understand that, everybody has their own pathway. We're here building blocks for apartment investing to bring folks on like Mike Morawski to prevent you going down that pathway. Or if something just doesn't seem right, it's like, hey, let me double think about this. But we're about to deep dive into the questions to see where Mike Morawski is currently at and how he is succeeding in life. Back to you, Will.
So, if you don't mind me asking, let's go back to at the height of your career as a business owner. How many employees did you employ at that time?
Yeah, as we built that company, we had about between 120, 125 employees.
Mike, with your extensive background within this industry, what would you say is the best way to build relationships with brokers, sellers, and private investors?
Pick up the phone and call them. That's the short answer, but this is a relationship business that we're in. And building relationships with different people gives you the ability to build a team like you guys have built here on this platform, right? You figure out what you're really good at, and then go find people who are good at the other things that have to happen. There's a lot of plates we have to spin in the multifamily business. And to keep them all spinning, it's hard to do by yourself. But if you have a good team around you, everything kind of keeps going forward and moving along. I always teach people when I'm coaching them to go build relationships with brokers. Pick your market, pick where you want to be, know what your buying strategy is, what asset you want to buy, and then go to those brokers. If you pull up a website for one of the major brokers, Marcus Millichap or CBRE or JLL, and you look at the multifamily brokers, don't go to the top broker on that list, go to the second or third broker down and call them and say, hey, my name is William Madison and I'm with XYZ company and I'm multifamily syndicator and this is our product that we buy. Can I get on your buyer list? And you want to get on the 5 major brokerage buyer lists in those markets so that you're getting all the deals that come on the market. There's some boutique buyers out there or brokers out there too. Get on their buyer list. Build your relationships with those brokers and get on those buyer lists. I believe that we are in a people game, and every day you need to be talking to people, meeting people. You can talk to somebody in a grocery store, at a barbecue, at a work function, and say, hey, do you do any real estate investing? When people ask me at a networking event, what do you do? I say, I'm the chief investment officer for a multifamily hedge fund. We buy large multifamily assets in the Southeast United States, and I raise private capital and bring investors in just like you that would want to see a better return than the stock market today and better protection on your principal. Is that something you'd be interested in? You know, we have to operate like farmers. So we plant a seed, we water it until the day we're going to harvest it. And that harvest would be because you put together a syndication, and now you're going to go back and call all those people that you started to build a relationship with, and see if they're interested in investing. So hopefully that helps.
Okay, I want to highlight a few other things that Mike just discussed. He mentioned buy strategy, your buying strategy. Know your buying strategy. We in the business, you may have also heard it as, what is your buy box? Okay, this is something that you need to know, especially when you're going to reach out to brokers. So for me, my buy box or my buy strategy is that I buy B and C class assets with value add component in secondary and tertiary markets. In between, my buying units are 50 to 200 units, garden style apartments. Okay, so again, he also mentioned calling CBRE, Marcus and Millichap, JLL. These are the big brokerage houses that in multifamily that a lot of sellers go to because they have the reach. So what I do when I reach out to these brokerages, I first go on their website and I see who's there. I don't go to the top manager or the managing partner. I don't go there. I go to, I find someone that says associate broker, because those guys are hungry and they will feed you deals and opportunity, because they know that they're there to sell apartments. And if you're new in this business, you may not quite speak the language, but some of those junior brokers, they will work with you because they know you have to start somewhere. A couple of other things that Mike discussed is relationships. If you're newer, or haven't done a deal in a while, as William and Dan said, come and talk to us. Sit down, let's have a conversation. Again, because we're building that relationship, we can help you move the needle, right? And also, there are other relationships you need. Again, the commercial brokers, they're commercial lenders. You need them. You need private investors. And as you're out here building your business, everyone that you talk to, you need to let them know that you are in this business, in the multifamily business. And again, if you know someone in your family, friends or family that's looking to passively invest, again, reach out to us here at Building Blocks for Apartment Investing. Also, we have interviewed great sponsors. So if you have a deal, reach out to us. We know sponsors that we can reach out to you to help you get your deal across to the finish line. We'll now hear Mike's comeback story.
So after being incarcerated, what was your inspiration to be able to build your portfolio again?
You know, that's a great question. I honestly thought I would come home. I built a business plan to just do coaching and training, and to not go back in the syndication business. And I was doing a meetup about a year out of prison, and I was telling my story. There were about 150 people on this particular meetup, and somebody, and I don't even know who it was, but somebody said, "Hey, are you raising capital again?" And I said, "No, I don't know that I'll ever raise capital again." And he said, "Why?" He said, "You know, all the people that syndicate deals, I don't know that I'd want to invest with anyone other than you, because you've made the mistakes. You know what to avoid and how to navigate things." And it was like, again, one of those defining moments that clicked for me, and I was able to go, wow, you know, he might be right. So I found a deal, went to a couple of my coaching clients with it, and we wound up partnering on this particular deal. But we had a syndication attorney out of our SEC attorney from Boulder, Colorado, said to me one day, she said, "Hey, I think I can get you approved by the SEC." And I said, "Have at it." And we never talked about it again for like 3 months. One day she comes back to a call we were on and goes, "Hey, look what I got." She had a letter from the SEC that, approved me. I was able to go back and do this. So, just kind of set me off to the races. It gave me a newfound kind of energy, freedom to be able to go out and do what I love to do, because I'm passionate about this business.
You're probably the first person that I've ever heard who have basically done what you've done and actually been approved by the SEC to basically start raising funds, selling securities. And that's great. That's a testament to your SEC attorney,
Yeah.
for even coming up with that idea. But let me turn a little bit. I need you to pull out your crystal ball. Pull out your crystal ball and tell us, what do you think the multifamily market in 2023 is going to be like?
My crystal ball's cracked. And all those snowflakes inside are falling out. But, I think that we're in a market right now that is changing. It's changing from this robust market that we had for the last several years to a market that's trying to find its way. I think we're going to see some decompression this year of cap rates, some price points going down. For the most part, I'm still seeing brokers try to sell deals on pro forma. And we all know that we have to buy on actual current numbers. We can't buy deals on pro forma. I appreciate the sellers that are trying to get out of deals still at an accelerated price. But, if you look at deals today in the market, there are deals that were on 6 months ago that there's been price drops, but they're still too high. I think we're going to see some more interest rate increases this year. The Fed's already said another 3/4 of a basis point at 3.25% bips 3 different times this year. And then they'll start to see some back off. The Feds have done a pretty decent job with slowing things down without causing things to crash. I think jobs are strong. I don't see a real weakness in the labor market. And I see opportunity. I think that some of the deals we're going to see opportunity in might not be in deals that you can go out and get, new fresh debt on, but they're going to be assumption deals. They're going to be deals where operators need to sell because they have a bridge loan coming due, or they have some floating rate debt that they can't, mitigate at the new level that debt has gone to. So I think there's going to be opportunity. I think you have to look under a lot of rocks and open a bunch of doors to find deals today that make sense, but they're out there. You just have to look and be willing to do the work to stay in the game.
In this clip, Mike spoke about bridge loans and assumption deals and brokers selling deals on pro forma. You never want to purchase a deal on pro forma. A pro forma is a cash flow projection based on the potential gross income that the property could generate if it was stabilized with 100% occupancy. You want to purchase multifamily deals on actuals. The actuals are the information that is represented in the rent roll and the T12. Those will help you determine the NOI of the property. An assumption deal is when you can assume the loan that is currently in place on the property. There's a 46-unit property in Philadelphia that we're currently underwriting that has a 5.4% interest only loan in place. If we assume this loan, it will be at a better interest from what we could currently get in the market right now. Now, I know these terms may seem a little confusing. However, the first 2 videos that we put on our YouTube channel were about multifamily terms that you need to know. When you get a chance, check it out. Next, Mike is going to talk about syndication structures. Mike has seen it all. In our next episode, We will discuss apartment syndications, asset classes, and strategies for sourcing off-market deals. Make sure you click that alert bell when you subscribe, and I'll see you in the next episode.